Good evening, my dear traders. This is Max from LearnThePriceAction.com. Today, I will be explaining to you guys a method that a lot of traders use and some professional traders have been using in the market. The method is very simple and it's called turtle soup. Now, in turtle soup, basically what we are looking for is false break of a previous level. Now, if you understand why false breaks happen, um, you would understand how the markets move. False breaks happen because the orders that are in the market, they want to get executed. Now, for the order to get executed, you need to have liquidity. Now, to create liquidity so that the banks, they can have the price they want, they drive the prices into orders where there is liquidity. Now, once the liquidity is there, they can get any price they want and then they push the market. So I'm just going to give an example. What is the meaning of that? For example, you have this is one of the horizontal line, and this is another horizontal line. And for example, we saw that the price is moving like this, and it has come like this, and we find a beautiful pin bar here, for example. Now, what will happen is that next day we would expect the market to move down, right? But this is not what happens. What happens is that market pushes up where people have put their stop loss. People have put their stop loss around here. Once the market pushes up, there is enough liquidity in the market, and then the prices will be repriced and the market will fall. This happens over and over again, and the reason behind this is that the orders that the banks want to execute on, they need to have liquidity to execute. Okay, no one is trying to hunt for your stop loss. The stop loss gets triggered time and again because the banks are seeking liquidity. So once you understand this concept, that's where the turtle soup happens. So this false breaks where everybody got messed up, that is called turtle soup. I'm just going to highlight that here. Okay. So every time market runs stop loss and closes in your favor, that's a turtle soup. Now, for you to do that, you have to understand where the stop losses are. Where would people put their stop loss? So let's look at an example here. For example, market was moving down, right? Now, everybody, you see this beautiful, beautiful, I'm just going to put an arrow here. You see a beautiful sell-off right here. And people are excited and they're moving down, 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 down. And all of a sudden, market comes up. And now where would the people put their stop loss? Just on top of it, right? And what happens here? What happens here? Bang! Everybody's stop loss is getting hit right here. And then, boom, the market closes in your favor. That's a turtle soup. You want to take entries like this. Right here. That is the golden opportunity. What do? You arm yourself. As this is a 4-hour chart for US dollar Japanese yen. But the moment You see this, you see people stop loss getting hit and then closing in your favor, bang, that's when you arm in, right? And then what do you do? For example, if you have your entry at the close of this candle, we'll put the stop loss on top of this. Because why you can put stop loss on top of this? Because it's safe now. Market has taken the liquidity. There is no reason for the market to go back to that same location where the liquidity was gathered. Sometimes it will. If the liquidity is not enough, market will again go back and capture more liquidity and close in your favor. Sometimes it happens. But loss is a part of trade. Now imagine this, if you enter here, right here, and then you can easily capture 3R profit right here. So if you, let's say you risk $100, $300 in the next 3 days. Is that bad, guys? Absolutely not. Okay. Now let's look at another scenario here. A beautiful, beautiful engulfing pattern, right? Traders will be like, wow, I have an engulfing pattern. I want to go short. I want to short this market. But what happens? Market comes back, boom, takes your stop loss. And what does it do? Right after taking the stop loss, it closes back. What do? You enter. You enter, another fall right here. Okay, so that is a turtle soup. Now I'll explain you a turtle soup which is in the opposite side of the market, right here. And you will see that happening over and over again, guys. Here, that's a turtle soup right here. The market, people put their stop loss, they see the pin bar, oops, we want to go long, let's go long, oh yes, it's going, and wrong, bish. And it takes your stop loss, guys. And every time this thing happens, it happens over and over and over again. Once you find this thing, the trading is such a beautiful process. Look at that, you enter here. Even though it's a counter trend, I don't recommend taking counter trend. And I'm not drawing any support and resistance, by the way. You play this strategy very well using support and resistance. But imagine this. If you entered here, you have easily made at least 1.6 times the reward. But this is a counter trend. I don't recommend you take counter trends, okay? Again, a turtle soup right here. I'll explain you. There you go. Now what happens here? Where is the stop loss? People put their stop loss here, right? Sorry. People put their stop loss here, right? Oh yes, this is the pin bar. I want to go long here. That's where the greed comes in. You want to get off the market wherever the chance is there. Now there is a concept called order blocks. You will see where to exit the market, and you can use simple strategies like pullback. For example, this is a swing high. You can take the pullback. 78% exit right here. Bam, right there on the target. If you would have exited here, your greed would not have taken over you and you would have made profit. But people want to hold on to their trades. And next day what happens? Market comes, bang, takes out your stop loss and goes where? Goes north. Bang, take out the orders and then goes south. Sorry, just gonna make this thing here again. It keeps on happening, guys. Keeps on happening over and over again. Once you understand this trick of liquidity, how the market works, you can make a tremendous profit. I hope today's short session was really helpful. Use this strategy, guys. I'm very, very confident that you will make a hell lot of money. But keep in mind the sessions. Most of these false breaks, they happen during London session or during the New York session. Asian session false breaks are not that powerful. I don't recommend you take it. So the candles you want to take, if you're living somewhere in North America, if you are in the Eastern time zone, the candles you want to watch for is 1 a.m. candle. I know it'll be sleeping time, but most importantly, 5 a.m. candle and the 9 a.m. candle. These are the two candles that will give you false breaks very, very often. Once you find those candles, if you find a turtle soup that's happening, hop on it, guys. You will make a lot of money. I hope you liked today's session. If you like it, give me a thumbs up and happy trading.